Good day, students. I will be doing the Gust close cooperation revision exercise. We have question 1 of Gust close cooperation. Who have two members, ARC and Gust has two members who share the members' interest as follows: 60% for ARC and 40% for Gust. So now these are the members' interest. We have a trial balance as usual, and in the trial balance we have retained earnings of 250,000 rands. We have revaluation reserves of 100,000 rands, and we have lend members contribution, and if you see the contribution of the members is 550,000 rands, which means all the contributions that were made by the members, they are all combined to that 550,000 rands. We have members interest free loan being 20,000 rands and 39,000 rands. So now these are the loans that were given by the close cooperation to the members. Then we have all the normal transactions. I just want to have a rough draft. We have inventory here of stationery on the 1st of July 2006, and that inventory of stationery is 1,160. That is the opening stationery as inventory by the beginning of the year. And we also have opening stock of 486,000 rands 400. So those are very important when we do the income statement. We are given a prepaid expense insurance on the 1st of July in the year 2006 of 1,800. Remember, this insurance was prepaid last year, so now in the current year we have to make a reversal, and we know that a prepaid expense is an asset. So now when we make a reversal for this asset, we have to credit prepaid expense and we debit insurance expense in the current year. Then we have another expense being accrued expense, and the expense that was accrued on the 1st of July 2006 is 800 for the wages. So now these are the wages that were not paid from last year. So now it becomes an opening balance of a liability, hence we see that on the credit side. However, by the current year, these wages would have been paid, because we see there in the bottom of the trial balance salaries and wages amounting to 356,000 rands. So now when this payment of the wages was made, obviously it was inclusive of that 800 which was accrued last year. So now that is why we have to make a reversal, because at this time of the year these wages of 800 are no longer accrued. Then after we have once again provision for bad debts, we also have SARS provisional tax payment of 21,600. This is one of the important line items in the trial balance, and I'll explain that when we want to calculate tax receivable or tax payable to SARS, we have to take into account that SARS provisional tax. We have SARS VAT sales purchases, and the minute you have your sales and you have purchases and you also had opening inventory that amounted to 86,400, it means when we calculate our cost of sales, we have to say opening balance plus purchases minus closing stock if there's a closing stock. So now these are just few entries that I wanted to highlight. Let me check if we have provision for bad debts. There we also have provision for bad debts, and our provision for bad debts amounted to 5,700 rands. So now if there is a new allowance in the current year, we have to account for that provision. Then before I go to the requirements, I will prefer to first go straight to what is required so that we know what will be done and what will not be done. Remember, some requirements are not much important for your exam, so I'll focus only on the very important questions, more especially for your exam. The first requirement says we must consider adjustment number 1 and the relevant accounts on the trial balance to do the journal entries for the stationery expense for the current financial year. So now with regard to the stationery expense, we have to take adjustment number 1 and other relevant entries. Then after, we are required under number 2 to consider adjustment number 2 and the relevant accounts on the trial balance to do the insurance expense account for the current financial year. I will also do that. Then after, adjustment number 3 says consider adjustment number 6 and the relevant accounts in the trial balance to do the general interest for the salaries expense for the current year. I will also take that into consideration. Then we are required under adjustment number 4 to consider adjustment number 8 and the relevant accounts on the trial balance to do the asset disposal. Remember, asset disposal was done last term, so now you will not be tested on the asset disposal this year. So I will not do the asset disposal section. However, I will tell you how much is the amount that was made in terms of either a profit or a loss on the disposal of this asset. Then after, we are required under adjustment number 5 to consider requirement number 5 to consider adjustment number 8 and the relevant accounts on the trial balance to do the depreciation account for the current financial year. Again, depreciation, the calculation of depreciation, you are very aware of that. I will not do the calculations, but I will take into account only the amount of the depreciation. I will just tell you how much is the amount of the depreciation, because depreciation obviously is affected by the asset that was sold and purchased. Number 6 says that consider all the relevant information and prepare the statement of comprehensive income for the year ended 30th of June 2007. I will also do that adjustment. Consider all the relevant information and prepare the statement of changes in equity for the year ended 30th of June in the year 2007. I will also do that adjustment. The next requirement is requirement number 8, where we are required to consider adjustment number 9 and 10 plus the relevant accounts in the trial balance to do the members' interest-free loan for the current financial year. I will also do that because it's one of the important things to do for this exam. Number 9, we are required to consider all the relevant information and prepare the balance sheet. I will not do that. It's not much important for your current exam or coming up exam. So now these are the requirements that we know we are required to do. So now I have already prepared the statement of changes in equity here below, which is the requirement number 7. Then after that, I have already prepared a rough draft of the income statement for this exercise. And in preparation of this rough draft, I wrote my sales, cost of sales. And remember, we are not given the cost of sales in the trial balance. The trial balance that we see, there was no amount of the cost of sales, which therefore means that when we calculate our cost of sales, we have to say opening inventory of 486,400, and we're supposed to add our purchases and we minus our closing stock, of which we'll see the closing stock under the adjustments that will be given. Then I wrote everything that appear on the income statement as it's supposed to be: other incomes, expenses, bad debts, and all these amounts. Please take this into account. All these amounts are the amounts that are already given from the trial balance. I just took them as they are and I recorded them as they are from the trial balance. Let us just check one or two amounts to confirm. Bad debts is 3,920, and there is the amount of the bad debts, 3,920 rands. Insurance is 23,400, and insurance it appeared to be 23,400 as you can see. So now, as I said, I just took amount as they are so that I only make adjustments to them. Then now we are also required, or we have another expense being rent that was paid, and the rent is 77,000 rands. And if you see rent is 77,000 rands, then is the rent paid. So now I just took the expenses as they are. Just want to make sure that we are on the same page. With regard to the stationery, with the stationery, I took the amount of the inventory of stationery that was on hand by the beginning of the year, 1,160, and I added the stationery that was purchased during the year, because the 2,000, the stationery that was 2.4, the stationery that was bought during the year. I just took these two as they are, and I just recorded them as they are: 1,610, 1,160, and 2,400 rands is 2,400 rands. So now we record that as 2,400 rand, which is the amount of the stationery that was bought during the year. Then after we have another expense, we don't have another expense. I've taken into account all the expenses. You can also do that for the sales. Whenever you do income statement, just do the rough record every expense that is already given to you. Now, when it comes to depreciation, remember depreciation, we know that you know how to calculate depreciation. So now there's no need for us to test you if you are able to calculate depreciation or not, because we have proven that you know. I just gave you the amount of the depreciation, and I've given you the amount of the loss that was made on the disposal of the asset. Remember, these two amounts were supposed to be in the trial balance, but this exercise was structured differently. But because you will not be tested in the calculation of depreciation and the calculation of the profit or a loss on the disposal of the asset, therefore now I just gave the amount as they are supposed to be. So now I will just go to the adjustments, and I will deal with the adjustments individually until I am done with all the adjustments that are supposed to be recorded in this income statement. Now also don't forget that we were required to do the members interest free loan. So now I have already prepared the rough draft of the two members, being AG and Gust, and I wrote the total. I only wrote the opening balance. Then I will check how much are my opening balances after I have considered all the adjustments. So now let us go straight to the adjustments, and we'll see how far we go with this exercise. The first adjustment tells us that inventory on the 30th of June 2007. Remember, this is the end of the accounting period, or the end of the current year that we are busy with. So now we are given the inventory of 160,400 rands. So now it means if we are required to do income statement, we have to take into account this closing inventory. So now with that, it means we can immediately begin recording all the amounts that are necessary to complete our income statement. Let me just begin with the amount of the sales, being 1,365,860 rands. So now just be recording every entry that affects the income statement as it arises. So now with that, let me just start with the sales amount, and the sales from the trial balance, as I have mentioned, that it is 1,365,860. 1,365,860 rands. That is our sales amount, 1,365,860. And our cost of sales, now remember, we don't have cost of sales. We need the opening stock, and here is our opening inventory. Only opening inventory, the trading inventory, not stationary. Stationary is not for trading. We just say opening trading stock 486,400. Then we add purchases, and here is the opening stock. Opening inventory 486,400. 486,400. Then we add purchases. and we do have purchases, and our purchases during the year amounted to 385,880. Then we say 385,880, 385,880. That becomes our purchases during the year. Then after we record the closing inventory at the end of the year, and our closing inventory is given to be 160,400 rands. We subtract 160,000 rands 400, 160,400. Then that should give us cost of sales as the negative amount of 410. So the cost of sales as negative amount of 711,880 rands. That will be our total cost of sales. Opening inventory plus purchases minus closing stock. That will give us the gross profit, and the gross profit should give us 2,007,740. That will be our gross profit. Remember, I'm just doing this because all these amounts were just given. There was nothing else to add after we have considered only adjustment number 1. Then after that, we are given the stationery at the end of the year. Stationery of 500 rands. Remember, we had stationery during the year that was bought, and it amounted to 2,400. And we also had stationery that appeared in the opening balance, and that stationery appearing in the opening balance was 1,160. So now for us to calculate the stationery that was used, because this was stationery opening balance inventory, and we bought another stationery opening balance of 2,400. Then at the end of the year, we're only left with 500 rands value of stationery. That means there is some stationery that was used during the year, because we had that beginning of the year and we bought this 2.4 during the year, but only 500 is left at the end of the year. So that tells us that the stationery that was used is somewhere in the middle. So now we calculate our stationery used. We say opening balance. Our opening balance of stationery amounted to 1,160. Then we say plus stationery that we see in the trial balance that was bought during the year 2,400. Then that will give us stationery available. That means stationery that was available to be used. Then when you add the two, it will be 1,160 plus 2,400. That will give us an amount of 3,560. Now this is the stationery that was available. To be used. Then at the end of the year, we only realizing that closing balance or closing stationery at the end of the year was 500. So now if we are left with 500, it means obviously the difference was used during the year. Therefore now 3,060 rand will be stationery that was used. Stationery that was used. And stationery used is an expense. Therefore now under our stationery in the income statement, we will record stationery of 3,060 as the total. However, remember we were required to do general interest for this. However, I prefer to first do it like this, then I do the general interest. So now we go straight to the stationery. And to the stationery, we already know that we said opening stock plus purchases, then we have to subtract closing stock. That will give us 3,060 rand, which is the value of stationery at the stationery that was used during the year, which is stationery expense. So now that was just the first adjustment that we took into account. So now let us just do general interest with regard to all that concerns stationery. So now when we do general journal for the stationery, which is number 1, general for the stationery. So now it means we'll have to debit stationery first, and debit stationery by an amount of 1,160. Remember, this is a stationery as an asset, then as an expense. Then after we credit inventory of stationery, stationery 1,160. The reason why we are doing this is because in the trial balance we have an amount of stationery that appear in the opening balance as 1,160, and if at the end of the year we only have 500, that indicate that this stationery was used during the year. So now we are taking it from the inventory account to the expense account, because as an asset of stationery is used, it becomes a consumable, being an expense. Then after, we have to record the second entry where we recognize the closing stock as an asset at the end of the year so that it can appear in the balance sheet. Then after, we record the closing stock, inventory of stationery at the end of the year, the one that was left. And the one that was left amounted to 500. Then we say credit stationery by an amount of 500. So obviously, if we have more left, that means what was used was less by 500 rands. Then after, we record the stationery that will appear to the income statement, which is the net of all these stationaries. Remember, the 2,400 was accurately recorded. We don't do anything with regard to that in terms of the general entry. Then after, we debit our stationery, our profit and loss. We debit our profit and loss, and we credit our stationery, being an expense. We credit our stationery for an amount of 3,060 rands, 3,060 rands. That is why I prefer that students should first do the calculations, because it just becomes so easy when we do it, transferring to the general journal. So now remember, the 3,060 is an amount of the opening balance, 1,160, plus the stationery that was bought during the year minus closing stock of stationery, that gave us 3,060. This is the one that will be recorded in the income statement. So now we have covered the first adjustment, and we have already recorded that in the income statement as the total of 3,060 after we have subtracted 500 of the closing stock of the stationery. Therefore, now it means we are completely done with the first adjustment, because the first adjustment required us to take into consideration inventory, which is the trading inventory of 160,400, which we have done that under the cost of seeds, and we have also taken into account this one in the income statement. So now remember, we are only doing the income statement, not the balance sheet. Number 2 says that insurance per month is 1,800. So now if insurance per month is 1,800, that should tell you that insurance at the end of the year will be 1,800 times by 12, or insurance for the year will be 1,000 times by 12. So now when we calculate our insurance for the year, it will be 1,800 times by 12. Therefore, now if we say 1,800 times by 12, we get to 21,600 rands. This is the insurance for the full year. So now let us check if are there any adjustments from the trial balance perspective. In the trial balance, we had insurance that was prepaid last year, 1,800. We had insurance that was paid during the year that amounted to 23,400 rands. So now remember, this is the insurance that was paid during the year. And remember, if last year there was a prepayment of 1,800, it means in the current year we're supposed to have paid 1,800 for 11 months. Why am I saying that? Is because 1,800 was paid last year for the current year. It means to pay insurance for 12 months for the current year, it was supposed to be 1,800 only for 11 months because the 1.8 was already paid last year. So now if you say 1,800 times by 11, we get 19,000 rands 800. But we have paid 23,400 instead of 19,800. It means obviously by the end of the year there was another prepaid expense of 19,800 minus 23,400. Therefore now it means there was another prepaid insurance of 3,600 at the end of the current year. So now I hope that does make sense. Remember last year we have already paid 1,800. It means in the current year we're supposed to have paid 1.8 only for 11 months, taking into cognizance of that 1.8 paid already last year. However, we paid 23,400 instead of 19,800, which indicated that 3,600 was another prepaid expense for the current financial year with regard to the stationery, the insurance expense. So now that means in the current year we have to take into account this 1,800, where we're supposed to add that 1,800 to the insurance of the current year. Then after we suppose again to remove the 3,600 that was prepaid for the next year. So now we have to say plus 1,800 here and minus 3,600 rands. Let me just show you all of those calculations. So now it means we have to say plus 1,800. That means we are adding the expense of last year, because last year when this was prepaid, it was an asset. Then in the current year now, it becomes an expense for the year. Then we subtract the 3,600 rands. Then after we get to the insurance expense for the current year as 21,600 rands. I hope this does make sense to you. However, I'll still do a ledger account for you to get more clarity. So now insurance, we have to add insurance that was prepaid last year, because last year it was not an expense for last year. We must add it in the current year because it belongs to the current year. Then after we subtract the 3,600, which was prepaid by the end of the current year. Therefore now we get to the confirmed amount of 21,600 rands, which is an insurance for the full financial current year. So now let me just show you another calculation. If you wanted, as I've shown you here, you could have just said 1.8 times by 12. You could have just said 1,800 times by 12. As you have seen that you get to the same 21,600 rands. 1,800 times by 12 is the same 21,600. So now this definitely proves that our calculations in terms of adding 1.8 and subtracting 3.6 are very accurate. So now let us just try to show this in a ledger account perspective, where we have insurance as an expense account. So now insurance as an expense account, we'll first have to take the total that comes from the trial balance. And in the trial balance, we have an insurance that appear there to be 23,400 rands. 23,400. Then after we record prepaid reversal, the reversal of last year, which is 1,800. Then after we say, okay, after we say 23,400, Then we have to record on the credit side the profit and the loss, which is the expense for the current financial year, which is made of that 1,800 times by 12, which gave us 21,600 rands, because we know the monthly insurance. So now we will definitely be aware that it was there for the full year, and then for full year 21,600. So now under profit and loss is 21,600, which indicated that the balancing amount must be on the credit side. Therefore now that will tell you that there was another prepaid insurance expense by the end of the year. There you'll have another prepaid 3,600, which is total of the debit side minus 21,600 on the credit side. Then that should give you 3,600 plus 21,600. It should give you 25,200 rands. 25,200 rands. 23,400 plus 1,800, 25,200. So now even if we do it in the ledger account, the ledger account by default tells us that 3,600 is prepaid expense. Remember, expenses decrease on the credit side and the increase here. So the minute a prepaid expense is recorded, or the difference is on the credit side, that indicates that this expense is decreasing by 3.6. And we have also shown that insurance is decreasing by 3.6. There is 3.6 negative in the income statement. I hope that does make sense. At the same time, on the debit side, insurance is increasing. Therefore, now here are the amounts that are added under the income statement, both of them. There we have 1.8 plus 23,400 rands. So now, with regard to the insurance, we have also covered that in details. Then after we go straight to adjustment number 3. Adjustment number 3 says a debtor who owes the close corporation 3,800 was declared insolvent. His estate paid 60% in the rent. The balance of his account must be written off as irrecoverable. So now, out of the 3,800 that the debtor owed the close corporation, 60% of that was received and the balance must be irrecoverable. That means 40% will be a bad debt. So now it means we have to say 3,800 rands. We times that by 40%. Remember, 60% was received. However, the remainder is a bad debt. That means 40% is the bad debt. So now if you say 3,800 times by 40%, that should give you 1,520 rands. Then 1,520 is a bad debt. Therefore now we must go and increase our bad debts by the 1,520 rands, which was not to be received. So now we know that 60% was paid. So if 60% was paid, it means 60% of the 3,800 will go to bank. So now anything that affects bank will definitely not affect their income statement, because the bank is an asset which will affect your statement of financial position under the current assets, cash and cash equivalent. So now we have recorded this, which goes to the income statement. Now that tells us that if 40% is 1,520, 60% will be the difference, which will be 3,800 times by 60%. Therefore, now it means the bank amount, or the amount that will go to the bank, which was received, will be 2,280. And 2,280 will be from 3.8 times by 60%. That will give you 2,280 rands. So now it means the total of 3,800 is no longer a debtor to the business, because 60% of that amount was paid and 40% of that amount became a bad debt. So now the full 3,800 does not belong to the business anymore. Is no longer a data to the business. So now if we go to the next transaction, this therefore now link with what we have done previously. It says adjust bad debts provision of the remaining debtors to 10%. Adjust provision of the bad debts to 10% of the remaining debtors. So now how do we do this? We first have to know how much is the amount of our debtors before the bad debt was taken into consideration for the current year. So now we have to go and check in the trial balance. And in the trial balance, we have an amount of our trade receivables or debtors control. Our debtors control amounted to 103,680. Debtors control 103,680 rands. So now from there, we can be able to calculate the amount of the outstanding debtors. So now we are calculating provision for bad debts. Our provision will be debtors, and our debtors are 103,680 minus 3,800 rands. Remember, 3,800 rands is the amount of the debtor who was declared insolvent and paid 60%, but 40% was irrecoverable. So now after we have deducted the 3,800, we realize that our outstanding debtors is 103,680 minus 3,800, and this gave us an amount of 99,800. These are the outstanding debtors. Then we multiply that by 10% and it should give us 9,980 rands. So now this will be the provision for the doubtful debts. So now after you have taken that into account, please go straight to your trial balance. Check if was there an estimate of provision for bad debts that was already made from last year, which became an opening balance. Here we do have provision for bad debts, 5,700 rands. So now we have to compare the one that we have calculated. We have calculated provision to be 9,980, but they tell us that the previous estimate of the provision was 5,700. So now that indicates that provision is underestimated. So now we need to increase our provision for doubtful debts to 9,880. So now we just have to say minus 5,700. Remember, 5,700 is the provision already given. This is the provision that come from the trial balance, TB, provision from the trial balance. So now we estimated last year that our bad debts, our provision will be 5.7, but it went up to 9,980. So now if you say 9,980 minus 5,700, that should give you an amount of 4,280, an amount of 4,280. That is 4,280 rands, which came from the 103,680 minus 3,800. Okay, here we have 80. Sorry, make corrections on that. And here we have 80. So now this is 99,980 times by 10%, which gave us 9,980 rands. Please, sorry for that mistake. Then after that will give us 9,000 here, 9,000, 4,288 rands. So now this is the amount by which our provision must increase by. This is the amount by which our provision must increase by. So now we have to go to our bad debts, and we increase our bad debts by 4,288 rands. Then under our bad debts, we just say plus 4,288 rands. Then now the total will be 3,920 minus 1,520 plus 4,288. That will give us 9,728 rands. 9,728 rands. Therefore, now we can continue with our adjustment. Please don't forget to write that in brackets. Then we go to the next adjustment. Once again, remember that was adjustment number 4, where we have covered the 10% of the outstanding debtors. Therefore, now we go to number 5, where we are required to provide for the outstanding interest on the investment on the 1st of January 2007. On the 1st of January 2007, the interest increased from 11 to 12%. So now there was an increase in the interest rate. Remember, the accounting period starts on the 1st of July and it ends in June. So now that means the interest on this investment was 11% for 6 months and 12% for 6 months. And we know that the investment is sitting at an amount of, we have an investment that is sitting at an amount, there is the investment. Fixed deposit, 96,000 rands. That was the investment. So now when we calculate the interest on that, we have to account for the interest for 6 months and calculate the interest for the next 6 months. So now we say interest. The interest we say for the first 6 months, it will be 96,000 rands times by 11% times by 6 months over 12 months. And if you do that, it will be 96,000 rands times by 11 times by 6 over 12. That should give you an amount of 5,280 rands. Then after we calculate interest for the next 6 months, and the next 6 months will be 96,000 rands times by 12% times by 6 months, which is January until June, divide by 12. After that has been done, will be 96,000 times by 12% times by 6 over 12. That should give you 5,760 rands. So now we can just add the two amounts, and after we have added the two, that will give us the total of the investment that was supposed to be received. 5,760 plus 5,280, that gave us 11,040 rands. So now 11,040 rand is the interest that was supposed to be received. But in the trial balance, was there any interest received? This is the interest on the investment, 8,940. So now it means we only received 8,940 instead of 11,040. Therefore now that will tell us that there's 2,100 which is accrued income. So now let us record in the income statement under our investment income. Our investment income will be the 8,000 that comes from the trial balance, 8,940 plus 2,100 which at the end gave us 11,040 rands. 11,040 rands. That will be our total investment income for the current year. Then now we can go to the next adjustment. The next adjustment is number 6. Under number 6, we have the wages that were accrued on the 30th of June in the year 2007. They tell us that at the end of the year, there was wages that were not yet paid by the end of June, and they amounted to 500. Let us check if was there any other wages that were accrued or prepaid from last year, which became an opening balance that was supposed to be reversed by the beginning of the year. So now if we check here, we have accrued wages of 800 rands, and we have wages and salaries that were paid during the year, and I did mention prior that this amount of the payment, it include the 800. So now this 800 is no longer accrued anymore at the end of the year, because this payment was made during the year and it's the total of all the salaries and wages at the end of the year. So now that tells us that we have to reverse those wages that were not accrued. Therefore now we also have to consider the wages that appear here as accrued at the end of this year. Remember, accrued expense is a liability. Accrued expense is a liability. So now if we had to do a ledger account or a general journal with regard to this, it will appear as I will show you in the workings. So now I'll just be doing the section of the wages. Therefore now let us just do it from the ledger account perspective, then after we do the general journal, because we are required to do general journal. But I always prefer to start with the ledger account. Wages, we have wages that we paid from the trial balance, and the total of those wages is 356,000 rands. 356,000 rands. Therefore now we have to make a reversal of this. If you see this accrued wages is a liability, so now when we reverse this, it must be recorded on the debit side. So now that means we have to debit accrued expense and we have to credit our wages by an amount of 800. So now we credit our wages by 800 and we debit our accrued wages by an amount of 800 rands. Then after, at the end of the year, there was another wages that was accrued, and they told us that it amounted to 500 rands. This is the one that we are dealing with. They told us that at the end of the year, there was an amount of wages accrued amounted to 500. So now this is an expense for the current year. So any expense for the current year must be increasing our expenses for the current year. Then we write that as accrued at the end of the current year. Then now we can just balance our ledger account or close our ledger account to check which side is greater and which one is smaller. 356,000 rands plus 500 minus 800, that will give us 355,700 rands. 355,700. This will be profit and loss. This will be profit and loss. And the total will be 356,500. 356,500. So now this is the amount of the wages that will go to the income statement under the total. So now general interest will first have to be the reversal of that. So now if you see in the reversal, our wages expense is recorded on the credit side. This is the debit side, remember. So now we have to debit accrued wages by an amount of 500 and we credit our wages. by an amount of 500. Then after, at the end of the year, we have to recognize the accrued wages at the end of the year. Then after, we debit our wages by 500 and we credit our accrued wages at an amount of 500. Then after, we have to record the third general entry. Remember, here is a line. The third general entry will be recording wages for the current year, where we close them off to profit and loss. Profit and loss, and we credit our wages, which is this entry now on the credit side, and that will be 355,700. 355,700. That is made of 356,000 rands plus 500 minus 800, which is a reversal in the current year. So now we have done the ledger account and we have done also the general entry for the wages. And as continuing again, we have to go to the income statement and we say plus 500 minus 800. As you have seen, that will give us an amount of 355,700. 355,700 rands. Then we continue again in the same spirit, please. We continue to number 7. Remember, number 7 has something to do with the asset disposal. They tell you that motor vehicle so and so was bought and sold. Please ignore this section because you have done asset disposal last term. So now you will not be tested on this again. They tell us under number 8 that land was revalued at 900,000 rands at the end of the year. And if you see in the trial balance, the land was 700,000 rands, and if it went up to 900,000 rands, it means the revaluation will be the difference between 700,000 rands and 900,000 rands, which will give us 200,000 rands. So now we say the land of 700,000 rands minus 900,000 rands, that will give us 200,000 rands. And we know this go to the statement of changes in equity. And immediately when you see that, don't hesitate, record it immediately because we have no time to waste. There we have our revaluation reserves. Immediately we record that under revaluation as 200,000 rands with no wasting of time. 200,000 rands, we record that. Then after, we go to the next requirement. Remember, the revaluation of the land does not affect the income statement. It will affect that at second year level. So far we don't show you that. Under number 9, it says during the year the following withdrawals were made by AG and Gust and have been debited against their members' interest-free loan accounts. And that was 100,000 rands and 39,000 rands. Then after, we are told that I will do this later on because it is a bit deep. When I'm doing the loan, then I'll explain that in details and how does it affect their loan accounts. Then under number 10, we have a distribution of 100,000 rands that must be made to members and for the current year, and it must be credited to their members' interest-free loan. So now we can immediately record that in the income statement. However, remember, this will affect the loan. Just to take note of it, this will affect the loan. This will affect the loan because it says debited against their members' interest-free loan. And also this said that which must be credited against the member's interest-free loan. So now the loan is affected and the loan is affected here. I'll do that when I do the loans. However, the distribution of 100,000 goes straight to the statement of changes in equity. And we know that a distribution is with no doubt affecting our retained earnings. A distribution which is given in this additional information that amounted to, just to confirm that distribution of 100,000 rands, that must be negative here. Distribution of 100,000 rands and 100,000 rands. Sorry that I'm broadening your mind too much. I'm doing this exercise at the broader scale. Each other that I've done the small exercises with you, the previous video, they were so easy. So now this was the adjustment before the last one, and the last adjustment now tells us about the taxation at the end of the year. The taxation expense for the current year amounted to 32,000 rands. Why are they doing this? Is because they want us to take into account tax in the income statement. Then after, the reason why they gave us that is for us to calculate tax that is receivable / payable to or from SARS. That means we want to know if do we owe SARS or not by the end of the year. How do we know that? We take the taxation expense. We say taxation expense and our taxation expense amounted to 32,000 rands. Whenever you are required to calculate tax receivable or payable to or from SARS, you say tax expense minus SARS provisional tax payment. SARS provisional payment. In the trial balance, there will normally be a provisional tax that was made by the business. Yes, there was a SARS provisional payment, 21,600. We supposed to have paid a tax of 32,000, but we have paid only 21,600. So now it means by the end of the year, according to our books, we have tax due to SARS. This will be tax due to SARS, and the tax due to SARS will be the 32,000 rands minus 21,600, which will give us 10,400 rands. So now whenever you are required to calculate tax due or receivable to or from SARS, you always calculate it like as I have shown you. So now that was the last adjustment. Then I will also record the 32,000 rands in the income statement. I just showed you this as an extra important calculation. Therefore now we go to our income statement. We just complete because we have done all the adjustments. So now for the rent, it means there was no adjustment. 77,000 remain 77,000 rands. Remember, I told you that depreciation and loss or profit on the disposal of an asset, you don't have to worry about the calculations of that. I just have to show you because we have done the topic of the disposal of an asset last term, and the calculation of the depreciation was captured in details last term. So hence I've given you the amounts. So now after we have done this, we can totalize all our expenses, and the total of all the expenses after we have added all of them together should be able to give us a sum of 573,000 rands. So now these will be our total expenses. Remember, the total expenses, they are exclusive of the investment. That means the investment income or the interest on the investment is not yet taken into consideration. So now we only add the expenses from there up to here, as you can see my borders here. Then after, remember, expenses are always represented as negative. So now remember, in this exercise there was no loan. Even the loan that was between the members of the closed corporation and the closed corporation was interest free. So now there is no interest charged on any loan, and there was no any other loan, either interest expense that was paid or incurred during the year. So now that means our finance cost will just not be needed. We just have to calculate our profit before finance cost and tax. And our profit before finance cost and tax will give us an amount of 91,932 rands. How do you calculate that? You say gross profit, which we see that our gross profit is 207740 77740. Okay, 207740 minus 570 3088. Then after we have to deduct, we have to take into account now our investment income, of which our investment income gave us 11,040. Therefore now we have to add that 11,040. That will give us 151,592. So now let us go with the calculation and capture all the amounts. Remember, we came from the sales minus cost of sales, just to refresh, and that gave us 2077740. Then we have expenses of 573,088. Then after that will give us our profit after the investment has been taken into account, 11,040. And after you have taken that, it should give you the profit before finance cost and tax as 91,932 rands. Then after, now I said there is no finance cost, then we can just erase the finance cost and only take into account the taxation expense. And our taxation expense will be 32,000 rands, as we have seen that. Taxation expense is 32,000 rands. Remember, tax expense is an expense, so an expense will have to be deducted. That means it has to be shown in brackets. Minus 5 then we get 32,000 minus 32,000 minus 32,000. Okay, I'm just doing the calculations now. Okay, let us start from the beginning. 1,365,860 minus 711,880. That 1,365,860 minus 711,880. So okay, there's just something wrong with the calculations here. I was just looking at the memo. So now it means our gross profit is not accurate here. Then our gross profit is accurately, I'm just checking this amount now, confirming it now, is 653,980 rands. Then if we subtract 573,088, that gave us 80,992. Okay, sorry for that, I was just looking at the memo. Then our profit here before the finance cost is 80,000 rands 892. Then we subtract our taxation expense minus 32,000 rands, that will be 40. After we have taken, okay, this is 91,000. No, that one is correct. That one is correct. Redo. 91,932 is correct. We just have to subtract 32,000 rands. So now, please, when you check at the memorandum, this amount is not accurate in the memorandum. So if in Blackboard it's not corrected, just make sure that you check this is not correct. I just confirm that in my calculations now as I'm doing this video. So now we get to the profit for the period. We get to the profit for the period. Profit for the period. And our profit for the period will be 59,932. 59,932. And from here we know that amount goes straight to the statement of changes in equity, 59,932. That will be our profit for the year. In the statement of changes in equity, we go straight, we record that as a profit for the year, 59,932. Then after now we can do the statement fully. Opening balance for the statement of changes in equity, we have to split the capital contributions for these members, because these members have a combined amount of the capital that was contributed, which was given to be 550,000 rands, and this must be splitted using the members' interest of 60% and 40%. And 60% of 550,000, it will be 550,000 rands times by 60%, which will give us 330,000 rands. Then 550,000 rands times by 40% will give us 220,000 rands. So now we record those as opening balances. 330,000 rands and 220,000 rands consecutively. 330 and 220,000 rands. Revaluation reserves, we have an opening balance of 100,000 rands. There is an opening balance of 100,000 rands. Revaluation reserves opening balance, although it's not stated the minute they gave us revaluation during the year and they don't say anything, then we assume that it was not yet taken into account in the trial balance. Then we continue recording the next opening balance, and the next opening balance is for general reserve. General reserve, we did not have any general reserve in the trial balance, and there was not any amount that was even transferred to the general reserve in this exercise. Therefore, now we have to record retained earnings, and our retained earnings have an opening balance of 250,000 rands. Opening balance of 250,000 rands is the retained earnings. 250,000 rands. And the total will give us an amount of 900,000 rands. Then profit for the year has been taken into account, 59,932. Additional capital contribution, there was no additional members contribution, there was no additional members contribution. Revaluation, there was no, transfer to general reserve, there was no transfer to the general reserve. Then after now we can just write the total as they are 330,000 rands, 220,000 rands, 300,000 rands is the total of the revaluation at the end of the year. Retained earnings, remember this must be in brackets, indicating outflow of cash distribution must be in brackets. Make sure that is negative. Then we have a total of that given to be 209,000 rands 932, and the total will be 1,059,932. So now that will be the total that will be recorded in the balance sheet. So now moving smoothly, going to the last part of the question. Income statement is completely done, but take into account once again that this amount in the memorandum is not correct. The one that was here, which is given in the memorandum, it was not correct, but I have adjusted it now. So now I can go to the next part, which is in the notes. In the notes, these notes are very, very, very important because there are two entries that affected the notes, which is the note on a loan free between the CC and the members. I highlighted these two entries, which was entry number 9 and entry number 10. Adjustment number 9 and adjustment number 10 were very important for the loan free between members and the close corporation. Let us start with number 9 and analyze number 9. Number 9 says that during the year, the following withdrawals by AG and Gust have been debited against their members' interest-free loan. AG 400,000 rands and Gust 39,000 rands. During the year, the following withdrawals. This is a withdrawal. But now they agree with the close cooperation that these withdrawals must be treated as if they are the loans. So now it means in this case the withdrawal of 100,000 and the withdrawal of 39,000 for AG and Gust respectively are transferred or recorded in their loan accounts. So now let us check in the trial balance. In the trial balance we have the loans, and these loans are 20,000 rands and 39,000 rands. So now the question is, we have the loans sitting at 20,000 and 39,000 rands, and they are sitting on the debit side of the trial balance. You see that. So now it means these members, they made withdrawals, and after they have made withdrawals, the balances after the withdrawals were 20,000 rands and 39,000 rands, because these withdrawals were debited against their loan accounts. So we go and check the amounts that they withdraw, 100,000 and 39,000 rands. And after these members, remember, after these members have withdrawn 39,000 rands and 100,000 rands respectively, the balances in their loan account became debit balances. That means after they withdraw 100,000 rands and 39,000 rands, they ended up owing the close corporation, because the minute a loan between a member and the CC is on the debit side of the trial balance, it's a sign or an indication that the member owes the close corporation. So now it means after they've made withdrawals, they ended up owing the close corporation. It means their withdrawals were higher than the loans that the close corporation was owing to them. So now let us go and check that in terms of how now do we record this. Remember, we don't have opening balance. Why do we not have opening balance? Because the 20,000 rands and the 39,000 rands are the balances after the withdrawals under adjustment number 10 were taken into account. Please take that into account. The balance that we see in the trial balance are after the withdrawal of 100,000 and after the withdrawal of 39,000 rands. So now those are not the opening balances, but the balance after the withdrawals have already taken into account. That is one of the things the trial balance is not clear with together with this adjustment. So now we are under that assumption that the balances in the trial balance are after the 100,000 and the 39,000 rands was recorded accurately. So we have to go and record the withdrawals and record the balances after the withdrawals. Because we don't know the opening balance, it's a question mark, and it's a question mark. Let me just take that as read. We don't know the opening balances, but we have question marks. Question mark and question mark. But we need to find these opening balances. But we know that during the year, there are withdrawals that were made by these members. And we know that if these members withdraw, then that would have been recorded as 100,000 rands and 39,000 rands. That would have been transferred to their loan accounts. That would have been transferred to their loan accounts. So now why this is recorded like this as negative is an indication of the loan that is given to a member being an outflow of cash. Even if you record that as positive, you'll still be accurately correct. No problem with that. This will be 139,000 rands. So now we are recording this from the outflow cash perspective. Then after the withdrawals were made, we see the balances now. We see the balances that are in the trial balance, which is balance per trial balance. In the trial balance, we have negative 20,000 rands, indicating a loan given to a member, and 39,000 rands. These are the balances that we see in the trial balance. Negative, indicating that these are the loans given to members, indicating the outflow of cash. So it means if this was positive, this was still going to be positive. And if this was positive, this was going to be positive. Please keep the method if you decide to use negative or positive amounts. Continue keeping the principle. Be consistent on what you do. So now in this case, we have to ask ourselves, if after the withdrawal of 100,000, the balance was negative 20,000, then how much was the opening balance? Then obviously one will analyze and think and say, no, that means the opening balance was less from 100,000 by 20,000. So now it means the opening balance definitely was 80,000 rands positive. That means there was a loan that was given by the member to the close corporation of 80,000 rands opening balance. But when the member made the withdrawal of 100,000, he ended up owing the close corporation 20,000 rands. So now that is why we have 20,000 rands negative after the withdrawal of cash which was debited against the loan account for this member. So now we go to the second member. Now if you see in the first member member AG, the balance after the withdrawal is not the same as the withdrawal. That is why there is an opening balance. But in the case of Gust, the amount that was withdrawn is equal to the balance after the withdrawal. It means the opening balance was nothing. So now that tells you that if the balance of the withdrawal is equal to the balance after the withdrawal, if the withdrawals were debited against the account, it means there was an opening balance. But if the balance that you see after the withdrawal is equal to the withdrawal, it means there was definitely no opening balance. So that if you say zero balance minus the withdrawal, you get the balance after the withdrawal as negative 39,000 rands. Then now the last entry that will affect the loan accounts for these members is adjustment number 10, which is the last one before I leave you in peace. Number 10 says that additional or a distribution of 100,000 must be made to members for the current year and must be credited to their members' interest-free loans. So now that means the distribution of 100,000, which must be splitted according to the members' interest, must be recorded or credited against the members' interest-free. So now let us split that. We say AG and Gust. We know that we have an amount of 100,000 rands that must be split in their members' interest. And we know that the interest of these members is 60 and 40%. There we have 60% and 40% respectively, AG and Gust. Therefore now we split the distribution to 60% and 40%. That means this member will get 60,000 rands and this member will get 40,000 rands out of the distribution. So now we must take that, we transfer to their loan accounts. Remember now, both of these members have a negative balance. That means they are owing the close corporation. So now the distribution of 60,000 and 40,000 to individual members indicate that these members are taking the distribution as a payment to their loan accounts. So now in this case, the payment will be reflected as positive. It will be positive 60,000 rands and positive 40,000 rands. Why? Because this indicates inflow of cash, of which at the same time that reduces the liability, which was negative. Therefore now this will be recorded as distribution credited. This was a withdrawal debited. This will be a distribution credited. Therefore now we have to calculate the closing balance. This will be 59,000 rands. Total here will be 100,000 rands. Then the closing balance will be 40,000 rands here, and here it will be 1,000 rands. And the total will be 41,000 rands. And the reason why the balance is 40,000 rands for the first member is for one reason, and it is very simple. Remember, the member had an opening balance of 80,000 he withdraw 100,000. He had a balance of 20,000 rands. Then out of the balance of the 20,000 that he was owing to the close corporation, he made a payment, indirect payment, through the distribution that was to be credited against the loan account. So now the distribution of 60,000 is reducing the loan of 20,000, which arose after the withdrawal of 100,000 rands. Therefore now the balance at the end becomes 40,000 rands. Same applies with this member. After the withdrawal of 39,000 rands, the balance that he owed to the close corporation was 39,000 rands. Therefore now he made an indirect payment through the distribution that was to be credited against his loan account. Therefore now it's more like he paid 40,000 instead of 39,000 rands. Therefore now the close corporation ends up owing him 1,000 rands. But for the first member, the close corporation ends up owing him 40,000 rands because he paid 60,000, which is 40,000 above to the amount that he owed of 20,000 rands after the withdrawal was made. So now with that, I am done with this exercise, and consider this exercise as very important. Thank you on my side.